The world of finance is in the midst of a profound transformation, one that promises to redefine the very nature of how we exchange value. For decades, the global financial system has operated on a foundation of slow, expensive, and complex processes, especially when it comes to moving money across borders. This antiquated system, known as correspondent banking, relies on a web of intermediary banks, each adding time and cost to every transaction. But a new technology is challenging this old order. We are witnessing the rise of a digital revolution powered by blockchain that is creating a more open, inclusive, and efficient global economy. This is not some distant future, it is happening right now, and at the forefront of this change are a company called Ripple and a digital asset known as XRP. It is crucial to understand the relationship between these two entities, as they are often confused but serve distinct yet complementary roles. Ripple is a private technology company based in the United States. Its primary mission is to build the financial infrastructure of the future, creating a seamless global payments network for banks, payment providers, and other financial institutions. Think of Ripple as the architect and builder of a new set of digital highways for money. On the other hand, XRP is a digital asset, independent of Ripple, that is designed specifically for payments. It acts as a bridge currency, a neutral asset that can facilitate the conversion between any two currencies in the world almost instantly. While Ripple, the company, champions its use, XRP, the asset, operates on its own decentralized public ledger, the XRP Ledger. The core problem that Ripple and XRP aim to solve is the inefficiency of cross-border payments. Imagine a bank in the United States wanting to send Japanese yen to a bank in Japan. Traditionally, this would involve a US dollar account being debited, the funds moving through several correspondent banks, perhaps being converted to euros first, before finally reaching the destination bank and being converted to yen. This process can take several days and involves multiple fees at each step. It's a system built for a pre-internet age, and it is holding back global commerce. Ripple provides the network, called RippleNet, and XRP provides the on-demand liquidity to make these transactions happen in seconds, not days, fundamentally changing the game for international finance. This distinction is the key to unlocking the potential of this technology. RippleNet is a network of financial institutions that have agreed to use a common set of rules and standards for sending payments. It is the software solution that connects banks globally. Within this network, institutions can choose to use XRP to source liquidity for their cross-border transactions. By using XRP, they no longer need to pre-fund Nostro and Vostro accounts in foreign countries, which ties up vast amounts of capital. Instead, they can tap into a pool of liquidity on demand, using XRP as the intermediary asset. This separation allows for flexibility. A bank can use RippleNet without using XRP, but the combination of the two is what delivers the most powerful benefits of speed, cost savings, and capital efficiency. To truly appreciate the revolution underway, we must look at how RippleNet and XRP work together to create a frictionless payment experience. The system is designed for one purpose: to settle payments with certainty and speed. When a financial institution on RippleNet wants to initiate a cross-border payment, it can use a feature called On-Demand Liquidity, or ODL. This service leverages XRP as a bridge asset to eliminate the need for pre-funded accounts. The process is elegant in its simplicity. The sending institution's currency, let's say US dollars, is instantly converted into XRP on a digital asset exchange. The XRP is then sent across the XRP Ledger, a journey that takes a mere 3 to 5 seconds to complete, regardless of where the sender and receiver are located in the world. Once the XRP arrives at its destination, it is immediately converted into the local currency, for example, Mexican pesos, and deposited into the recipient's bank account. The entire end-to-end transaction, from dollars in the US to pesos in Mexico, is settled in under a minute. This is a monumental leap forward from the traditional correspondent banking system, where settlement can take 3 to 5 business days. The XRP Ledger, the decentralized technology that powers the movement of XRP, is built for this specific purpose. it is not a general-purpose blockchain like Bitcoin or Ethereum. It is a highly specialized financial tool designed for enterprise-grade performance, capable of handling 1,500 transactions per second with incredible reliability. This mechanism fundamentally changes the economics of global payments for financial institutions. The old system required banks to park large sums of their capital in accounts all over the world, just in case they needed to make a payment in a particular currency. These are called Nostro and Vostro accounts, and they represent trillions of dollars of trapped, unproductive capital. With Ripple's on-demand liquidity, that capital is freed. A bank no longer needs to predict its payment needs and pre-fund accounts in dozens of countries. Instead, it can access the exact amount of liquidity it needs, at the exact moment it needs it, by simply buying and selling XRP in a matter of seconds. This frees up capital that can be used for more productive purposes, like lending to businesses and consumers. The beauty of this system lies in its ability to connect disparate payment systems and currencies that were previously siloed. XRP acts as a universal translator for value, a common language that any currency can be converted into and out of. This creates what we call the Internet of Value, a world where money moves as seamlessly and instantly as information does today. For the first time, financial institutions have a viable alternative to the slow and costly legacy systems that have dominated for the past century. By leveraging a neutral, high-performance digital asset like XRPP, RippleNet provides a pathway to a more efficient, inclusive, and interconnected global financial system where value can be exchanged without friction. The core value proposition of using XRP for cross-border payments can be broken down into 3 transformative benefits: unparalleled speed, dramatically lower costs, and access to on-demand liquidity. First, let's consider speed. In our digitally connected world, we expect information to travel instantly, yet money has lagged far behind. A wire transfer can feel like sending a letter by post in the age of email. The XRP Ledger shatters this paradigm. Transactions on the ledger are confirmed and settled in just 3 to 5 seconds. This is not a preliminary confirmation, it is the final, irreversible settlement of value. For businesses waiting on payments to ship goods, or for families relying on remittances, the difference between 5 seconds and 5 days is life-changing, reducing uncertainty and improving cash flow dramatically. Next, we must examine the cost. The traditional correspondent banking system is notoriously expensive. Each intermediary bank in the chain takes a cut, and foreign exchange conversion rates are often opaque and unfavorable. These costs are ultimately passed down to consumers and small businesses, making it expensive to send money abroad. Transactions using XRP, however, have a minuscule fee, typically costing just a fraction of a cent. Even when factoring in the exchange fees for converting fiat currency into and out of XRP, the total cost of a payment is reduced by an estimated 40 to 60% compared to traditional methods. This makes financial services more accessible and affordable, particularly for the low-value, high-volume payments that are common in remittances and small business trade. Perhaps the most profound advantage is the access to on-demand liquidity. As discussed, the legacy system forces financial institutions to tie up trillions of dollars in pre-funded Nostro and Vostro accounts around the world. This is a massive drag on the global economy, representing dead capital that could be used for investment, lending, and growth. Ripple's on-demand liquidity service, powered by XRP, completely eliminates this requirement. A bank in Brazil can send a payment to a partner in Korea without needing to hold Korean won. It simply uses its Brazilian real to buy XRP, sends the XRP, and the recipient institution receives it and converts it to won, all in seconds. This is a game changer for capital efficiency, allowing institutions to optimize their balance sheets and enter new markets without the massive upfront capital investment. These 3 pillars, speed, cost, and liquidity, work in concert to create a superior payments experience. Fast settlement reduces counterparty and settlement risk. Low transaction costs open up new use cases and make financial services more inclusive. And on-demand liquidity frees up trapped capital, stimulating economic activity. This is not a minor incremental improvement. It is a fundamental re-architecting of how global finance operates. For banks and payment providers, adopting this technology means gaining a significant competitive edge. It allows them to offer better, faster, and cheaper services to their customers, from large corporations managing global supply chains to individuals sending money home to their families. The Internet of Value is being built on these powerful advantages. While revolutionizing cross-border payments and remittances is the primary focus of XRP today, its potential extends far beyond this single, albeit massive, use case. The underlying technology of the XRP Ledger is a robust and efficient platform that can support a wide range of financial applications. The same features that make it ideal for payments, speed, low cost, and scalability, also make it a compelling foundation for the next generation of finance, including areas like smart contracts and decentralized finance, or DeFi. The vision is to expand the Internet of Value to encompass not just simple payments, but all forms of value exchange, creating a more dynamic and accessible financial ecosystem for everyone. One of the most exciting future developments is the integration of smart contract capabilities. A proposed amendment to the XRP Ledger, known as hooks, would introduce small, efficient pieces of code that can be attached to accounts, executing logic before or after a transaction is processed. This could enable a host of new functionalities directly on the ledger, such as automated payments, escrow services, and even the creation of simple financial agreements. Imagine an account that automatically rejects incoming payments below a certain amount, or one that automatically splits a payment among multiple recipients. This brings a new layer of programmability to the ledger without sacrificing its core performance for payments. Furthermore, the XRP Ledger is well positioned to play a significant role in the burgeoning world of decentralized finance and the tokenization of assets. DeFi aims to rebuild traditional financial services like lending, borrowing, and trading on open, decentralized platforms. The XRP Ledger already features a built-in decentralized exchange, allowing for the peer-to-peer trading of any token issued on the ledger. This could be used to trade tokenized real-world assets, such as stocks, bonds, or real estate, with the same speed and low cost as a standard XRP payment. This opens the door to creating more liquid and accessible markets for a vast array of assets that are currently illiquid and difficult to trade. In conclusion, the impact of Ripple and XRP is about much more than just making old systems a little bit better. It is about building entirely new ones. By providing a public, decentralized infrastructure optimized for the secure and instant transfer of value, the XRP Ledger creates a level playing field for innovation. From streamlining global payments and remittances today to enabling complex smart contracts and tokenized asset markets tomorrow, its journey is just beginning. The ultimate goal is to create a single, global network where value moves as freely and efficiently as information does on the Internet. This is the promise of the Internet of Value, a more open, transparent, and inclusive financial future for the entire world.